Welcome. I'm Dr. Price, and I will be sharing my research on price action with you. We will be conducting an experiment to see if we can actually make money with trading. Now is a great time to get started in trading because there's this thing called prop firms. It's now possible to conveniently access a large amount of capital with only a little. The catch is you have to pass a test. In my research, I found that the best two prop firms are currently my Forex funds and the Funded Trader. We will be commencing in two $300,000 evaluation challenges, one from each prop firm. What this means is if we pass both tests by hitting a phase 1 return of 8% or $24,000 in profit, and then a phase 2 return of 5% or $15,000 of profit, we will have access to $600,000 in capital and start getting paid real money for our trade intel. Boy, are we excited. There are many models of risks you can use, but to keep things simple, we will be using $1,000 risk per trade in the beginning, allowing at least 30 trades. However, if we reach $3,000 of profit or more, we are upping our risk to $3,000 per trade. This helps us stay alive when things are not going our way, while pushing our edge when the tides are in our favor. While I'm a master of many markets, we will only be focusing on the Nasdaq, dollar, euro, and pound for this experiment. I will showcase our trades for today, Friday, September 30th, 2022. These screenshots were taken after the trades. It may be hard to follow as I won't be explaining every detail of every trade in full depth. It's assumed that you know the concepts being talked about. The purpose of these is just to create a log of accountability for now. Many timeframes will be used, so feel free to pause and go back and forth to see the full picture. The date is also provided so you can find the area of price on your own chart. In this 1 hour chart, we see Thursday's lows being swept and a retracement into the range. It rebalances a 1 hour gap and breaks structure to the downside. This next 5-minute chart, we see the chart in more detail. There was news at 8:30 where price rallied and then dropped, breaking a 1 hour low. Price continues lower, forming a 5-minute gap. During opening bell, we see a retracement into this gap where we went short as denoted by the X. SL means stop loss, TP means take profit. Our stop loss was a bit larger than it had to be, but we were being safe for our first trade as 9:30 open likes to whip around sometimes. The reward to risk ratio is only 1, but that's okay. We hit our TP within 10 minutes, netting us around $1,000. Minutes later, price reverses above the opening price, breaking 5-minute structure. On the 1 minute, another gap appears. We took another entry at the X, but this time aiming long for the overnight highs. It eventually gets there with a greater reward to risk ratio. I want to highlight my emotions and mistakes during every trade so I can continuously be aware of my mental state and make adjustments to improve. So I actually exited my trade after price broke on the 1 hour. However, I immediately got FOMO, the fear of missing out, and jumped back in nearly at the same price without a stop loss using the same position sizing. As it fell and then broke structure on the 1 minute, I doubled the position with a tighter stop. After realizing what I had done, risking more than $1,000, breaking my initial risk management rule already, I quickly took a partial take profit and closed one of the positions as it broke the high. I tightened the stop of the remaining position and left the TP for the overnight high, which it eventually hit. I got lucky. To recap, we took 2 trade ideas, which both panned out as highlighted in yellow in this 1 hour chart. The first aimed for the lower 1 hour gap. The second aimed for the overnight high. While I did have the idea to short from that high, something had come up and diverted my attention away from trading. I saw price drop down but felt content with my win and did not engage further with price. Here are the results. We will be betting $3,000 on our next trade.